Good morning, traders. This is Michael coming to you from GammaEdge on Wednesday, October 23rd, pre-market morning strategy and briefing session. SPX game plan's been posted, single stock game plan's posted, market trend model's also been posted. So we'll go jump right into it. Three pillars here at GammaEdge that we like to cover every morning. Structure, sentiment, and trend. And we start with the trend. MTM, caution is still warranted. Obviously, the bolded CT, which is our 1 to 3 day look, is tried to stabilize towards the end of the day and flatten out. We still have negative slopes on the railroad track moving averages, as well as the red is compressing and just trying to cross below the cyan right now, which is our long-term colored ribbon. So we'll continue to monitor this day over day. Again, as of now, caution is warranted on the long side unless we see the bolded CT really start to turn up above these moving averages and then cross back above the colored ribbon. When we're living under the colored ribbon, we like to use the phrase prone to failure. So we could move back up towards this colored ribbon and then see some sort of reaction and failure with buyers trying to take control, and then sellers coming back in and taking control and driving us down lower. I do have the price of the SPX overlaid here. Obviously, you can see we've had multiple gap downs and then climb higher. Looks like we may be doing the same thing today. We'll see where this kind of levels out. That 58.25 we'll cover here in a little bit is an extremely important level, and you can see two gap down levels where we've had that previous day. So we'll watch those levels as we head into the open. Full complex SPXP here, we are call dominated above and below spot price. We see a very narrow transition again, which is nice. We've had that past couple days. This gives us certainty in the market above and below where transition is at, 58.45, 58.50. Again, we bring those levels back into play pretty much the past 2 days, same levels we've been watching. 58.35 to the downside. We'll continue to watch that level. We're basically flirting with that pre-market. The upside, we still have PGEX and COI OTM call speculation up towards the 5,900 level. Plus GEX did drop, or sorry, net GEX did drop day over day just slightly, and we'll look at that here in a second. So this is our SPX full complex kind of dashboard. You see the GEX ratio drop slightly, and then overall the net GEX drops slightly, not a significant amount. Again, call dominated prior day heading into today. So you can look at this chart via the dashboard. Just gives a nice quick glance to be able to look at the levels and the changes day over day with a little bit of commentary there. SPX delta balance, we did see the erosion again in the right-hand plane, OTM call speculation day over day, so that may be the possibility to see some more weakness. If we do not see the weakness, it's going to be difficult to move up. Obviously, that 58.50 to the upside will be that level we're watching, and then 58.70 to the top side, drunken sailor range, which we'll talk about on the 0DT here in a minute. We are seeing some erosion into Friday also in that right-hand plane. Again, the left-hand plane is maintaining its strength, but we do see that OTM call speculation to the upside continue to wane a little bit. And we do have to see that OTM call speculation for us to drive significantly higher. What we saw yesterday, obviously, if you were watching the vol command in the gap down, was most likely just puts closing, and then not a significant amount of OTM call speculation coming in. So again, we continue to drift higher towards that 58.50 and then hit that stalling point. Where we kind of level out and balance, and we do not see any more significant call speculation come in to continue to drive price higher. So we'll see if that plays out again today, the same scenario. But again, just keep in mind the right-hand plane, the call speculation to upside is decreased. The SPXP for 0DT, we're call dominated above and below spot price. Transition again, very narrow. We've drawn the range here, 58.25 to 58.70. We did draw this distribution curve. As you can see, it's very balanced above and below transition for the most part. So again, we're just kind of stuck within this overall range unless we do get significant change via vol for a 0DT day. If we get below 58.25, I would look for some more weakness. If we do see those call and put centroids in a negative slope, down towards 5,800 would be my thesis and probably my trade plan. Within this overall range, we'll continue to see chop, again, 58.25 to 58.50, and then look for some sort of stalling rejection. If we do get above the transition, then obviously driving up towards 58.70. if we do have MTM confluence and vol-am positive slopes would aid in that to move up towards 5870. Again, not expecting anything above 5870 unless we see significant change in the vol-am and MTM. And then that 5900 obviously is sitting up there with COI. Peak X obviously at 5870 would need to get above that with spot price. The dashboard for today, obviously call dominated, change there, or no change there, day over day. You can just quickly look through this, and Drunken Sailor range outlined 58.25 to 58.70, really not much change from yesterday. So again, we've just kind of been in the same range, the same distribution without much change in the overall structure. So unless we get some move outside of these ranges with some larger adjustments in sentiment and structure, will most likely be maintained within this, even possibly weakness down towards 5,800. So we'll continue to watch that. Net stat command heading into today, 5750, that in the money net delta. I talked about that. Possibly Charm, Gamma, and Vanna all sitting there at 58.25, 58.30. Remember, those are second and third order Greeks, so delta will overpower or take over if we do see significant change on the vol-am. To the upside, we see these OTM calls at 58.70. We've already discussed that level multiple times. Really, the whole right-hand plane strike is at that 58.70. So Charm, if spot price stays within this overall range and not much volatility, these OTM calls will continue to grow, which will be that overhead type ceiling that will not allow spot price to push up unless we see the delta significantly change. SPY delta balance, we do continue to think or theorize that the SPY is using as a hedging instrument. You see the weakness coming in there for today, Wednesday, and Thursday, and then Friday we see that change. So we'll continue to monitor this day over day. But we continue to think the SPY is being used as a hedging instrument to the overall SPX and the overall market structure. SPX P+1 DTE, call dominated into tomorrow. We see 212,000, so a decent amount of OI heading into Thursday. We do see the transition expand a little bit, which gives us that little bit more uncertainty. But again, within the 0 DTE range and within the full complex range, so really not much change in structure as we've really been discussing day over day. Net stat command for +1 DT, we do see the right-hand plane move up a little bit with the respect to Charm, Gamma, and Vanna, but really the left-hand plane stays pat. 58.35 in the money calls there. So again, same levels, same structure, same sentiment we continue to talk about. So unless we get, again, some major sentiment and structure change in the overall market, most likely will be contained within that lower Drunken Sailor range or even 5,800. And the upper transition range, and then obviously Drunken Sailor range. So make sure you just continue to watch that and see if there's any significant changes. The balance of the week, call dominated still. As we saw in that delta balance, we did see today and Thursday as a little bit weaker, but then Friday we do regain that delta balance that's bullish. Again, same kind of range though, 58.35 NGEX, 58.70 PGEX, narrow transition, COI at 5,900. So, and you see kind of the distribution right within this middle section here. So really not much change again for the balance of the week when you add all that in. So we'll jump into our thesis for today. Obviously, we see 58.31 pre-market here, watching that 58.25 level. So we'll go ahead and jump in the SPX chart. So kind of my ranges for today, I've drawn the Drunken Sailor range. I've just outlined these kind of volume areas too with the overall gamma delta levels that I just talked about. I've just drawn these gray boxes just to give you a visual reference. Personally, I like drawing these because intraday gives me a visual reference of what spot price may be, and these are kind of take notice areas. Obviously below this 58.25, I'd be looking for a move down towards these previous lows, 58.05, 5800, and then 58.50. I've really drawn that middle, that transition, kind of that balance area. Above 58.50, we could push towards that 58.60, 70 level, and then up towards 75. So your risk reward Once you reach these levels, just watching these with the vol-m command and understanding that from 58.50 to here is a very short risk reward, and then from here to 58.75. So these are definitely button the seat trades if you're 0DT trading to the downside or to the upside. Obviously, opening below or opening down towards this 58.30, this lower area is very close. Your risk reward to the downside is not significant unless we get below this drunken sailor range, and then you have a decent risk reward down towards these previous lows. So again, just understanding these are areas, we'll have price ebb and flow and reactions. You see these larger wicks within these areas, you could push down and then just get an immediate reaction back up. So this is going to be difficult trading, basically, is what I'm going to say. Just within this overall drunken sailor range will be difficult. Just we have a balanced range on the sentiment and structure there. So again, trading within this overall structure is going to be difficult unless we get some significant move outside of these ranges and some major market adjustments. So again, these are button seat trades. Just don't get chopped up. Wait for your pitch. Wait for A+ setups. I really don't see great A+ setups for P-Trans to PGEX today, or even single stock names. We're really kind of stuck within a structure for many of the single stock names also. So anyway, that's my thesis for today. Less is more. MTM is caution is warranted. So that's how I would be trading today until we get a firm plan, either direction. Transition's very narrow, so you could trade against that. But then again, these are just going to be very short-term trades between these levels. So, and if you're new to that, then it may be better just to not put your capital to work today. And just wait until we get some definitive moves either direction out of these ranges. So, all right, that's all I have for today. Hope everybody has a great day, and we'll see you in the Discord in a few minutes. Thanks.